Hello, soldiers. Very good morning. Subodai. Vanakkam. Welcome to ICAI live coaching classes for paper number 5, Advanced Accounting. My name is Satcharazu Koluru. By profession, I am a practicing chartered accountant. Out of my passion, I'm a faculty as well. So here totally I'm covering 3 chapters. One is amalgamation of companies along with accounting standard 14. And another chapter is internal reconstruction. And one more I am going to cover, which is liquidation of companies. So totally we are going to spend almost 9 slots. In these 9 slots, I will try to cover all these 3 topics. And approximately these 3 topics combinedly will cover 20 marks. 20 marks I can put in this way. That is from 15 to 24 marks it may cover. So this slot is very important to the students who are going to give their attempt for P5. Okay, without wasting much time, I'm directly entering into the subject. And before starting with the subject, first of all, I'm providing very few instructions for a hassle-free listening of classes. I already posted this PDF. From which PDF I'm going to take classes, that PDF was already posted in your PDF corner. You can download it before listening the class itself. And one more, the solutions copy also I provided completely. Might be we are unable to cover each and every problem due to lack of time, but all the solutions I already provided through a PDF copy. Again, you can download that PDF copy as well. Fine. And one more thing, certain point of times, I will use my classroom running notes, which was already a running notes prepared by me for the previous batch students. The same running notes sometimes I may use for taking the examples to save my time. This is the flow you need to adopt. Hope you all with me, guys. Can I start? Put all of you your thumbnails in your query box. At any point of time, if you have any query, you can put in your question box. Can I start, guys? All of you with me? Please put your thumbnails. Then I can start. Then I can easily understand you are with me. Fine. So now the chapter is reconstruction, guys. Reconstruction. Sir, you put the heading amalgamation, but why you wrote the word reconstruction here? Because amalgamation is a topic which is form part of the concept under reconstruction. So let us start our entire discussion with reconstruction. I don't want to go into the technicalities right now itself. Can you please tell me, anyone, in the basic or the layman mode, what is the meaning of reconstruction? So the word reconstruction, whenever we are listening, our thought process will be like this. Sir, in generally for buildings or for the constructions, we are using the word reconstruction. When people will go for reconstruction of the buildings, maybe there are certain problems with the existing building. Yes, no doubt about it. There are certain problems with the existing building. Then people will definitely go for reconstruction. Then they are having 2 options. If you observe clearly, sir, they will demolish the existing building. They might go for new construction. Yes, absolutely. And another option they are having is, rather than demolishing and construction of a new building, they may go for renovation as well. People may have a doubt that, sir, is it accounting class or is it any civil engineering class, sir? No, guys, just believe me, trust me, you will enjoy my sessions like anything. Once you are in touch with me, once you are habituated to my class, you can enjoy throughout my session. Please, all of you. Sir, in case of new construction of buildings, there is one advantage as well as disadvantage. Do you know what is the advantage? The advantage is it is a brand new. It is a brand new. It is new building. Absolutely. Which is a brand. Which is not a new building. Which is not a old building. Whenever people will see, they can easily identify that, sir, which is altogether a new building. They might forgot the old building at all. Sir, what is the disadvantage, sir? Sir, huge expenses. The disadvantage is huge expenses they might incur. So then coming to renovation, what is the advantage? The disadvantage in case of new construction is advantage here. That is very less expenses they might incur. Sir, what is the disadvantage here? Everyone can easily identify which is renovated building, which is old building only. They might go for some painting activities, or they might cover up certain holes, or some other renovation activities are happen. So which is disadvantage? That means there is no brand loyalty, or they can easily identify which is a old building. Now, coming to the company point of view, till now, we discussed the issues related to a building, right? Now, if you come to a company which is suffering from certain problems, then also there is a necessity to go for reconstruction. For better understanding, just I want to take a one company information. Hope the company balance sheet is visible to all of you, which is the balance sheet of Rani Limited. Just a second. Yeah. So which is the balance sheet of Rani Limited as at 31st March 2020. Sir, what is the balance sheet information they given? Let us have a look. Let us have a quick look. Share capital. Under share capital, equity share capital is given. 1 lakh equity shares at the rate of 10 rupees. That is total 10 lakh. Preference share capital, 10,000 preference shares at the rate of 50 rupees each. That 50 rupees is the face value. So the total will be the 5 lakhs. Under non-current liabilities, 10% debentures given. Bank loan is given. And which is current liabilities. So the total of the liability side is 27 lakh 50,000. Now coming to asset side, PPE, property, plant and equipment, intangible assets given, current assets given, profit and loss account debit balance given, miscellaneous expenditure not written off also given. So this is not the schedule 3 format of the balance sheet, just a layman balance sheet for understanding, just I given. Okay. So now you may have a question that what is the problem with this company, sir? Everything will be fine. So just they are providing their balance sheet by following the accrual concept and everything was done. What is the necessity to rebuild the balance sheet? What is the necessity to reconstruct the balance sheet? If you observe, there is a huge P&L debit balance will be there to the extent of 6 lakhs. And one more thing, miscellaneous expenditure not written off was also exist under asset side, which is a fictitious assets. That means, do you really think that this 6 plus 2.5 lakh to the extent of 8.5 lakhs, is it a real worth of assets exist in the outside market? No, not at all. Then how you can tell the assets worth was 27 lakh 50,000? That is my first question. And another question, sir, I am telling intangible assets worth was 4 lakhs. Is it really intangible assets worth maybe 4 lakhs? For example, in such intangible assets, goodwill will be there. Let us assume that was internally generated goodwill. For the time being, you can assume. Now, the company is a loss-making company. Then under such intangible assets, Rani Limited is really having such amount of goodwill? No. So that's why you can assume this is an unrepresented intangible asset. That means that intangible asset doesn't have any market value in the outside environment. So that is the reason we can simply tell that the financial statements of Rani Limited not depicting true picture. There is a overvaluation of assets. There is a overvaluation of assets. This 8.5 lakhs is not the real worth. And that to this intangible assets is also not the real worth. Due to this, there is a overvaluation of assets as well as overvaluation of net worth. Whenever there is a overvaluation of assets, we can simply tell there is a overvaluation of net worth. what I told previously, whenever we are facing certain problems with the existing building, we can go for reconstruction by demolishing the existing building and rebuild a new building, or without demolishing we can go for renovation as well. Am I right? As like in the same way, now Rani Limited is facing certain problems by not depicting the true picture, then we can also go for reconstruction. Then we can also go for reconstruction. Now we can do such reconstruction in two ways. One is external reconstruction and another one is internal reconstruction. One is demolishing the existing building and rebuild a new building, and another one is without demolishing the old building, just we can go for renovation. In the same way, we can go for external reconstruction as well as internal reconstruction. Sir, in case of external reconstruction, what happens, sir? We are liquidating the existing company, and altogether we are going to converting into a new company. In case of internal reconstruction, what is going to happening, sir? We are not liquidating the existing company, just we are continue with the existing company, but internally we are making certain changes. The same thing happened previously also, if you can observe. Now in first case, we are demolishing the existing building, means in case of external reconstruction we are liquidating the existing company, and altogether we are incorporating a new company to take over the existing building. Altogether we are rebuilding a new building. That is external reconstruction. Now in case of internal reconstruction, we are not at all constructing any new building, just we are going for renovation without liquidation of existing company, just we are continue with the same company. Now sir, what is the reason whether you are going for external reconstruction or internal reconstruction? I already told you the reason is very simple, or the objective is very simple. The reconstruction objective is to show the financial statements at their true picture. There is no overvaluation of assets, there is no overvaluation of net worth. Now just we want to disclose the financial statements at their true and fair values. That is the major objective of reconstruction. Hope you understand, guys. Guys, do you have any queries up to this? Sir, can we take up the notes, sir? Sir, these written notes also are uploaded by you on BOSF. Guys, after completion of this lecture, I will also upload these written notes as well. Don't be hurry and worry. So just please, all of you, concentrate my class. Whenever there is a necessity, I will tell you from my end, then you can take such notes. That is more than enough. Now you can give 100% concentration, your 100% concentration on listening the class. Whenever it is required, I'll tell you. Okay, that is the only query. Sir, reconstruction related to revaluation. My dear Karthik Gupta, just wait for 5 more minutes. Okay, whether revaluation and all such things happened or not, I will clearly establish. Yeah, fine, guys. Let me continue my flow. Now, come down. Sir, now coming to external reconstruction. To speak technically, what happens, sir? On which basis we can go for external reconstruction, or what is the procedure we can adopt? Is there any legal background it have? Yes. Section 232 of Companies Act 2013 is entirely discussed with things related to external reconstruction. Whenever we are talking about a company, Companies Act 2013 will take place. Know that. And apart from that, we are also talking about the accounting treatment. Then any specific accounting standard is applicable or not, also we need to check. At later point of time, I will discuss in accounting point of view. So then what about internal reconstruction, sir? Which sections are dealing with internal reconstruction? If you observe, I clearly wrote here section 61 and section 66 of Companies Act 2013 are dealing with internal reconstruction. Sir, in external reconstruction, no need of court approval. But in case of internal reconstruction, court approval should be mandatory. I think it is better to discuss about internal reconstruction before discussing external reconstruction. So please give some time space to me to discuss about external reconstruction. First, let me take the concept of internal reconstruction. But guys, please remember, whatever the concepts now I am dealing in very basic mode, just to be understand. Okay, so all the technicality issues and all such accounting issues we are going to discuss at later point of time. Sir, in case of internal reconstruction, the base concept, we are not liquidating the existing company, just we are going to continue with the same company, Rani Limited. But how you can go for the internal reconstruction, sir? What is my objective? My objective is very simple. I want to show all such components of the financial statements at their true picture, right? Now, for that purpose, what I should need to do, sir? First, you should need to do revaluation of assets and liabilities. Revaluation of assets and reassessment of liabilities. For example, sir, PPE, it is having 10 lakhs. Is it really in the outside market also it have 10 lakhs? No, sir. Let us assume it have 12 lakhs. Then you can go for upward revaluation. For example, if you can check for this bank loan 2,50,000, bank loan person is ready to waive off to the extent of 10,000. Let us assume. Then you can put a bank loan at 2,40,000. Now, at the time of revaluation of the assets and reassessment of liabilities, you may arrive certain profits or certain losses, which are generally known as revaluation profits or revaluation losses. Sir, what can I do such revaluation profits or losses? You can put it to a single account. You can put it all such profits or all such losses to a single account. We are in the process of internal reconstruction. That account is generally known as reconstruction account. Temporarily, whatever the word you want to use, just use that account, or X account, Y account, which is a temporary account. All the profits or all the losses which we derived during the process of internal reconstruction, simply we transfer to that account. Sir, what else we are doing under internal reconstruction process, sir? We are making so many negotiations with all the creditors or all the liability holders. For example, we are having current liabilities of 2,50,000, right? In such current liabilities, creditors are there. Let us assume. Then you can go for a negotiation with creditors. Sir, our company is in the process of internal reconstruction as per section 61 and 66 of Companies Act 2013. So that's why we can go for certain negotiations, sir. We are unable to pay that amount of 2,50,000. We can able to pay only 1,50,000. Yes. You can also go for negotiations with equity shareholders as well as preference shareholders. Sir, why they are agreeing, sir? Why they will accept, sir? Because our company is a loss-making company. If you are not agreeing, then I can go for the liquidation process. If I can go for the liquidation process, you are unable to get that amount as well. Because during the process of liquidation, what the liquidator will do, that is also our chapter actually. In detail, we will discuss in the liquidation of companies. But in the layman, just I am telling what the liquidator in general will do. Liquidator will realize all those assets, and the cash receipts he will get through realization of all such assets. Simply he is distributed among the various liability holders in a particular order. If the cash receipts realized from such assets are less, then these liability holders may not get the full amount. Am I right, guys? So that is the reason why during the process of internal reconstruction, while making certain negotiations or compounding activities with the various parties like creditors, debenture holders, and non-current liability holders, and the equity shareholders or the preference shareholders, they might agree. But after conducting so many meetings, all such issues are generally occurred. Okay, fine. So that means what you are trying to establish in case of internal reconstruction, revaluation of assets and reassessments of liabilities happen. Apart from that, you can also go for certain compounding activities with the creditors as well as equity shareholders and preference shareholders. And after completion of all such activities, you may get certain profits, right? Through revaluation of assets and reassessment of liabilities as well as compounding activities, you may get certain profits, right? Such profits we are put under reconstruction account, right? Now reconstruction account is having certain balance of profits, let us assume. Now such profits we are using to set off this profit and loss account debit balance, as well as this reconstruction account is also used to set off the miscellaneous expenditure not written off. Then profit and loss account debit balance is knock off, and miscellaneous expenditure not written off will also vanish. Then we are also telling that, sir, certain intangible assets are unrepresented. Then you can also set off the reconstruction account balance with intangible assets as well. Then automatically the components of the financial statements will be in clean sheet mode. That means all the assets are at their market value, and all the liabilities, after making negotiations, we know the real values to be payable to that particular party, and equity share capital, preference share capital will also be finalized after conducting their respective meetings. This is the process in generally happening in case of internal reconstruction with the same name, Rani Limited. Sir, but do you think that all this process is happened without the court approval? No, because each and every person rights and duties are impacting here. So that's why before establishing the process of internal reconstruction, each and every company, whether it is private limited company or a public limited company or a one person company, irrespective of the type, they should need to take the approval from the court. Once the court approved, then only they should need to initiate this internal reconstruction process. And one more thing, guys, after completion of the internal reconstruction process, each and every company should use the word and reduced under the bracket mode at the time of presentation of the balance sheet. That means after completion of the internal reconstruction, they should need to use the word and reduced under the bracket at the time of preparation of financial statements. I already told the advantage for internal reconstruction, very less expenses compared to the external reconstruction. Why you know very less expenses? There is no liquidation of company happen. We are just continuing with the same company. Sir, but in case of external reconstruction, what happened? First of all, we are liquidating the existing company. Again, we are establishing a new company. The company is already a loss-making company. Sir, liquidating and go for a new company. Once if you incorporate the new company, then again you need to build the prospectus. Again, you need to issue the equity shares. Again, you should need to go for the stock exchange coding. You should need to pay the stock exchange fee. All such external expenses like preliminary expenses you should need to incur. Already our company is a loss-making company. If I want to establish a new company, some more expenses I need to incur, which is disadvantage in case of external reconstruction. I already told you, which is advantage in case of internal reconstruction. Okay, let it be. Put it aside. We are deeply discussed all such issues in the chapter so-called as internal reconstruction. So let it be for the time being. You can put aside. Now this is the time for external reconstruction. Can you please tell me, guys, all of you with me? Are you able to understand? Sir, can you please tell me, guys, all of you, do you with me? Can I continue my flow in the same speed, or can I reduce my speed as well? Because this is the first session, you need to adjust with me. Can you please put your query? One or two students, sir, is the flow is enough, or can I reduce my flow? I mean, a little bit slower should be required. Please let me know, guys. At least one or two people. Please let me know quickly. Then I will continue. Yes, sir. Clear. Understood, sir. Speed is good. Okay. Fine. No issues, guys. At any point of time, if you have any issues, like you need to repeat certain complicated topics or something, if you put on the query box, then I will repeat as well. No worries. Okay. Fine. Now, come to the process of external reconstruction. Sir, in case of external reconstruction, first of all, a new company is incorporated. Let us assume this company is Rani Limited, right? Now, I am going to incorporate a company called Razu Limited. Now, I am going to incorporate new company, Razu Limited. For which purpose you are incorporating this new company, sir? This new company is incorporating to take over the existing company. Razu Limited is incorporated to take over Rani Limited. That is the objective. That means Razu Limited is going to take over the assets of the Rani Limited as well as the liabilities of the Rani Limited. Do you understand? That means Rani Limited should need to liquidate their own company, as well as Razu Limited should need to incorporate a new company. In fact, to speak frankly, Rani Limited and Razu Limited both are same. Both are same. Why, sir? Due to takeover of Rani Limited by Razu Limited will ultimately pay certain amount to the shareholders of the Rani Limited. That means the shareholders of Rani Limited should automatically become the shareholders of the Razu Limited, means there is no difference between Rani Limited and Razu Limited. Do we agree, guys, all of you? Razu Limited take over the assets of Rani Limited as well as the liabilities of the Rani Limited, due to which ultimately Razu Limited will issue certain amount in the form of shares to the shareholders of the Rani Limited. Sir, now Razu Limited is purchasing the business of Rani Limited. If you buy or if you purchase something from the other party, you should need to pay certain cash amount. That cash amount may be paid in the form of shares by Razu Limited to Rani Limited. Now Rani Limited shareholders will get Razu Limited shares, means the shareholders of Rani Limited should become the shareholders of Razu Limited. Yes, sir. Now, but what is our objective? To show the financial statements a true picture. That is the reason Razu Limited will only take over the assets at their agreed value, not at the book value. For example, in the outside market, this PPE is at 12 lakhs, then Razu Limited is going to take over this PPE at 12 lakhs. Sir, there is no value for intangible assets, means Razu Limited not at all take overing the intangible assets. Sir, profit and loss account miscellaneous expenditure not written off is not at all an assets. That's why Razu Limited not at all take over these two components. Do you understand? Now this non-current liabilities and current liabilities is also taken over by the Razu Limited at their agreed value, not at these book values. Then automatically Razu Limited balance sheet, once they will construct the Razu Limited balance sheet, it is altogether shown at true and fair value. That is the reason why people can go for the external reconstruction. But here one disadvantage is there. I already told you, Razu Limited is altogether a new company. To incorporate that company, it should need to incur the huge expenses. But one advantage is, while looking the Razu Limited, people may think that it is altogether a new company. Nobody will think about the Rani Limited whenever seeing the Razu Limited. Am I right or wrong, guys? But in case of internal reconstruction, if you check, the same Rani Limited is going to continue prepare their financial statements with their own name, as well as they also need to put under reduced reward. Under reduced reward, they should need to put, which is disadvantage in case of internal reconstruction. So hopefully, I established the difference between external reconstruction and internal reconstruction. Sir, actually our topic is amalgamation. You put the word amalgamation here, right? But till now, you discussed the concept of external reconstruction and internal reconstruction. What is the link between amalgamation and external reconstruction, sir? One type of amalgamation is a classic example for external reconstruction, guys. Slowly, I am entering into the topic. Please, all of you be with me. One type of amalgamation is a classic example for external reconstruction. Yes. Amalgamation in the nature of merger. This is too early to introduce that word or to speak that word, but no worries. Just one type of amalgamation is amalgamation in the nature of merger is a classic example for external reconstruction. Sir, first of all, before telling about all such things, what exactly amalgamation is all about, sir? Can you please tell? Please, all of you be with me, guys. First, I'm going to discuss about the concept of amalgamation. Then I will try to establish the link between amalgamation and external reconstruction. Please, all of you concentrate here. There are two companies. Let us assume one is A Limited and another one is B Limited. Sir, A Limited is an existing company. A Limited is a existing company and B Limited is also existing company. Now, these two companies put together, want to merge and want to establish as AB Limited. They want to merge and they want to establish as AB Limited. Now, if you observe, I told you A Limited is an existing company. B Limited is an existing company. AB Limited is a new company. Now, a new company is incorporated to take over two or more existing companies. Then such process is known as amalgamation. Such process is known as amalgamation. What is the meaning of amalgamation, guys? A new company is incorporated to take over two or more existing companies is known as amalgamation. Sir, at the same point of time, I also want to introduce the concept of absorption. Please, all of you be with me. Once I will introduce the word absorption, then I will tell the difference between amalgamation and absorption and how those are connected to external reconstruction also I'm going to discuss. Concentrate. A company, A Limited, is there. Another company, B Limited, is there. Now we are talking about the concept of absorption, not amalgamation. Sir, A Limited is an existing company. B Limited is also as an existing company. Now, B Limited wants to take over A Limited. B Limited wants to take over A Limited. That means an existing company will take over one or more existing companies. One existing company will take over one or more existing companies. Such a process is technically known as absorption. Absorption. Such process is technically known as absorption. Now, what is the difference between amalgamation and absorption, sir? What is the difference between amalgamation and absorption? Sir, to call a particular concept as an amalgamation, minimum 3 companies should be required. 3 or more is possible, out of which 2 companies should be existing companies and 1 company is a new company. A new company is incorporated to take over 2 or more existing companies. 2 or more existing companies is known as amalgamation. But in case of absorption, all the companies are existing companies only. One existing company will take over 1 or more companies. One existing company will take over 1 or more companies. Then such process is known as absorption. That means in case of absorption, all the companies are existing companies only. But in case of the amalgamation, at least one new company should be required to absorb all the other existing companies. Do you understand? So that means, is it amalgamation and absorption both are different concepts? These two are actually 2 different concepts. But for our chapter, we are considering absorption also as an amalgamation. Why, sir? Why, sir? Please, all of you concentrate. Literally, there is a difference between the concept of amalgamation and absorption. But what I am telling here, amalgamation includes absorption as well. The reason is very simple. Here, the existing companies are known as selling companies, guys. Existing companies are known as selling company. Do you know why? AB Limited is a newly incorporated company to take over both the existing companies. That's why AB Limited is a purchasing company. AB Limited is a purchasing company. A Limited is a one selling company. B Limited is another selling company. Now, in case of absorption also, B Limited, the company which wants to take over another company, is a purchasing company. And A Limited is selling company. That means whether the concept is absorption or amalgamation, two different types of companies are exist. One is selling company and another one is purchasing company. In case of absorption also, one is purchasing company, selling company. That's why for the purpose of providing the accounting treatment, there is no difference between amalgamation and absorption. That's why in generally we are considering absorption also as amalgamation, but literally there is a difference between amalgamation and absorption, because in case of amalgamation, a new company is incorporated to take over two or more existing companies, but in case of absorption, one existing company will take over one or more existing companies. But for the purpose of providing the accounting treatment, there is no difference between amalgamation and absorption. Amalgamation includes absorption. Now, consider it, guys, all of you. Sir, how these two topics are relevant, or what is the connection in between amalgamation, absorption, and external reconstruction? Please consider it, guys. Come back to the external reconstruction. Sir, in case of external reconstruction, what happened? In case of external reconstruction, what happened? A new company, Razu Limited, is incorporated to take over Rani Limited. Now, Razu Limited is a new company. Rani Limited is a existing company. Now come to my notes here. So here I am taking two companies. One is Razu Limited. Sorry, this is Rani Limited. One is Rani Limited, which is an existing company, guys. Which is existing company. Another company, which is newly incorporated company. Now we are incorporating, which is Razu Limited. This Razu Limited, we incorporated to take over the business of Rani Limited, which is altogether a new company. So Razu Limited is incorporated to take over the Rani Limited. Am I right? This process, what we call? This process is called external reconstruction. Now consider all of you. Sir, in case of external reconstruction also, two companies involved. Razu Limited is a purchasing company. Rani Limited is a selling company. But what is the objective? Why Razu Limited is take over the Rani Limited? Tell me, guys, all of you. To show the financial statements at a true and fair view. That is the objective. That is the objective. The objective is to show the financials at a true and fair view. But the objective in case of amalgamation or absorption, whenever I'm using the word amalgamation, it includes absorption. The objective in case of amalgamation and absorption is not to depict the true and fair picture of the existing companies. The objective is quite different. The objective in case of amalgamations are, maybe the objectives are to get the synergy benefit. Synergy. What is the meaning of synergy benefit, sir? Synergy means 1 plus 1 is greater than 2. For example, I'm having certain resources. The other company is having other type of resources. If these two companies combine, then the new company is much more powerful than the existing resources. How it is happen in generally? For example, I'm in the automobile industry. I'm having very good technology with me, but I'm not having good market in the particular country. Then what I will do, I will amalgamate with the existing company, which is in generally happen in case of Maruti Suzuki, which is a famous Maruti Suzuki. Okay, sir, Suzuki is having the technology. Maruti is having the marketing, good market in the Indian country. They might combine and they launch the Maruti Suzuki, which is 1 plus 1 is greater than 2, which is having synergy benefit. Or they might amalgamate with each other to avoid the competition. Yes, that may be also one of the reason. If both are having the very good rivalry, so due to which they are foregoing certain profits, So to avoid the competition, they may amalgamate with each other. Yes. Or people may go for the amalgamation for the purpose of expansion. Yes. Sir, expansion means this market is altogether new to me. That's why I want to expand into that market. So just I want to amalgamate with a new company. Certain times they might go for the amalgamation for getting taxation benefits. Yes. How it is possible, sir? How the taxation benefits they may get? For example, A Limited is an existing company, B Limited is an existing company, or come for absorption. I will tell this taxation benefit concept to absorption. A Limited is an existing company, B Limited is an existing company. A Limited is a loss-making company, let us assume, which suffered from huge losses. B Limited is having huge profits. Now, if B Limited takes over the A Limited means these losses might be set off with the profits. Then the net tax payment payable to the government will be very much less. To get the taxation benefits also, people can go for amalgamation, which amalgamation includes absorption as well. But the objective of external reconstruction is different. What is the objective of external reconstruction? To show the financial statements at a true and fair picture. But the objective of amalgamation and absorption is different. But why you are linking amalgamation and absorption with external reconstruction, you know, whether it is amalgamation, pure amalgamation, or whether it is absorption, or whether it is external reconstruction, there is no difference in accounting treatment. There are only two different types of companies exist. One is purchasing company, another one is selling company. Whether you can take external reconstruction concept or absorption concept or amalgamation concept, only two different types of companies exist. One is selling company, another one is purchasing company. That's why for the purpose of providing accounting treatment, we are considering all these types of three concepts put together. That means in future, we are only discussing about two different companies accounting treatment. One is selling company accounting treatment. Another one is purchasing company accounting treatment. Whether it may be amalgamation, whether it may be absorption, whether it may be external reconstruction, it doesn't matter. But all these three are three different concepts. Are you with me, guys? All of you? Do you understand till now? Till now? Tell me, guys, can I proceed? Please, anyone, tell me, can I proceed? Are you with me? Are you able to understand? Sir, then what is merger and all such things? Please be wait for some more time. So still I am in the intro part only. Please give some time. Each and everything I'll explain. Yeah, fine. All are telling, yes, sir, we got the concept. Yes, sir, wonderful. Thank you, my dear guys. Please, all of you follow my further flow. Come back to my main material. So till now, what we have discussed, such all things, just I want to summarize in a very quick mode, that is in 2 to 5 minutes. Meaning of reconstruction, what exactly the reconstruction is all about. When a company making losses for several years, then the financial position may not depict a true and fair picture. In such a company, the assets are generally overvalued. Balance sheet consists of fictitious assets like miscellaneous expenditure not written off, and unrepresented intangible assets and debit balance in P&L account also it have. Such a situation always leads the company to show a higher net worth. We already told you, not depicting a true and fair picture of financial statements. In short, the company is overcapitalized. Such a situation brings the need for reconstruction or reorganization of the affairs. We clearly discussed all such issues by inculcating into the balance sheet of Rane Limited. Hope you are agree with me. In further, types of reconstruction, internal reconstruction and external reconstruction. In case of internal reconstruction, pure Companies Act 2013 is applicable. In case of external reconstruction, along with Companies Act 2013, AS 14 accounting for amalgamation is also going to applicable. The reason is I already told you, amalgamation in the nature of merger. One type of amalgamation is a classic example for external reconstruction. But just now I introduced AS 14. there is an interlink up between external reconstruction and AS14. The reason is external reconstruction and amalgamation and absorption. All are we are seeing put together in the chapter amalgamation. So that's why in case of external reconstruction, AS14 is also applicable. Sir, in case of internal reconstruction, what you are going to do, sir? It is a process by which affairs of the company are reorganized by revaluation of assets and reassessments of liabilities, by writing off the losses already suffered, by reducing the paid up value of the shares or varying the rights attached to different classes of shares. Sir, such all issues I not at all discussed. In deeply, we are going to discuss in the chapter internal reconstruction. But what is the objective? Can you please tell me what is the objective of internal reconstruction? The objective is depicting the true and fair picture by reorganizing the capital and with the compounding activities with the various parties like creditors and the debentures and such all other parties like equity shareholders as well as preference shareholders. Sir, is it winding up of the company or the liquidation of company happened in the internal reconstruction? No, without winding up of the existing company. That is more than sufficient for a basic understanding of the internal reconstruction. In detail, we are going to discuss in the main chapter. Now, coming to external reconstruction, it is undertaking is being carried on by a company and is in substance transferred, not to an outsider, but to another company consisting substantially of the same shareholders with a view to its being continued by the transferee company. Sir, which is more technical. We already discussed in my OneNote. What we discussed, you know, in case of external reconstruction, a new company is incorporated. Even though the company is a new company, in substance, which is not a new, because the shareholders of Rane Limited automatically becomes the shareholders of the Razu Limited. That's why in substance, both are same. The same point actually he is emphasizing here. Such external reconstruction is essentially covered under the category of amalgamation in the nature of merger under accounting standard 14. I already told you external reconstruction is a classic example for amalgamation in the nature of merger. Okay, come down, guys. Sir, what is the difference between internal reconstruction and external reconstruction, sir? In case of internal reconstruction, no liquidation. But in case of external reconstruction, liquidation. The existing company is liquidated to form a new company. Am I right? That is the major difference between internal and external reconstruction. Sir, reduction of capital and varying rights. Just now I read here in case of internal reconstruction, the rights, varying rights may be possible. I not yet discussed, but here there is a word, there is a varying of rights is there under internal reconstruction. Yes, under internal reconstruction, there is a varying of rights. But in case of external reconstruction, there is no reduction of capital and there is no varying rights also possible. Okay. Legal position, I discussed section 61 and 66 are dealing with internal reconstruction. Tell me, guys, I already discussed section 61 and 66 are dealing with internal reconstruction. In case of external reconstruction, section 232 is applicable. The same I established here as well. Legal formalities. Sir, court approval is required for internal reconstruction or external reconstruction? Court approval is required for internal reconstruction. The same thing here given. Court's confirmation is required in case of internal reconstruction. But without the court interference, external reconstruction is going to occur. Then I discussed the concept of amalgamation, right? In case of amalgamation, what happened? Two or more companies join to form a new company, which is known as amalgamation. We already seen in my OneNote. In case of amalgamation, A Limited and B Limited are existing companies. AB Limited is a new company. A new company is incorporated to take over two or more existing companies, which is known as amalgamation. And absorption is also form part of amalgamation. But in case of absorption, what happened? Blending of one by other. Blending of one by other means both are existing companies. One existing company will take over another existing company, which is absorption. Absorption also we are in generally call it as form part of amalgamation. Fine, guys. That's it, guys. That is the basic introduction I given for the concept of reconstruction, internal reconstruction, external reconstruction, and the objective of reconstruction, and the meaning of amalgamation and absorption. How these are in generally we can put a link to the external reconstruction concept. For the purpose of providing accounting treatment, there is no difference between amalgamation, external reconstruction, and absorption. because there are two different types of companies are there. One is purchasing company, another one is selling company. Come back, guys. Sir, break is going to come within half an hour. Please, all of you bear with me. We can try to take the break by 8:15 like that. So initially, more theory for you. So once we are entering into the problems, once we connected with the problems, then you can enjoy the session in a much more happiest way. Okay, fine, guys. Sir, is there any other names are possible for the selling companies, sir? Selling companies, certain other names are also they are generally using, that is vendor company, or maybe transfer or company, whatever the word you are using, that itself represent selling company. For purchasing company, they might use the words vendi company, or they are using the word transferee company. Transferor means selling company, transferee means purchasing company. That means only two different types of companies are possible, that is purchasing company or selling company, or vendor company or vendi company, or transferor company or transferee company. Am I right? And one more technical word, if you want, you can use, that is amalgamating company and amalgamated company. What is that? Selling company is known as amalgamating company, which is going to melt. That's why, which is known as amalgamating company. AB Limited is an amalgamated company, which is a new company. So totally four different words I given, which represents the selling company, amalgamating or selling or vendor or transfer company. Coming to purchasing company, vendi, transferee or amalgamated companies. So any word they might use in the problems. Come down, guys. Now in the chapter amalgamation, what are the issues they are trying to cover, sir? You might already guess, or you may guess, that is just now we told you only accounting treatments in two different companies we are going to discuss. One is accounting treatment in the books of selling company, and another one is accounting treatment in the books of, come on guys, only two different companies are possible, purchasing company. And one more, while purchasing companies take over the business of A Limited and B Limited, that is existing companies, purchasing company should need to repay certain amount, are coming to the absorption. B Limited is ready to take over A Limited means B Limited is take over assets and liabilities of A Limited means in consideration B Limited should need to pay certain amount to the A Limited, which is technically known as purchase consideration. One more important concept we are going to discuss, which is purchase consideration. So in the chapter amalgamation, totally we are going to discuss these three concepts. Once I discuss these three concepts, the chapter amalgamation will be automatically over. One is accounting treatment in the books of selling company, and another one is accounting treatment in the books of purchasing company, and another one is the concept of purchase consideration. All of you, please come back to my notes here, guys. Come down. Yeah, come here. We already discussed the concept of amalgamation, absorption, and external reconstruction, right? Till now we discussed. Now further, I need to start discussing the concept of amalgamation and the problematic areas under the amalgamation. Sir, up to now, all of you with me, guys? Please let me know before starting with the problematic issues in the amalgamation. Are you clear, guys? Is it clear to all of you? Let me check. Very few queries are raised by our friends. Let me check one by one quickly. Okay, before proceeding with the problematic issues. Sir, does the existing companies, the amalgamating companies, do they exist in individually or do they get wound up? Yes, my dear, they are liquidate individually because here A limited, B limited is there, right? A limited is going to liquidate individually and B limited is also going to liquidate individually. Then AB limited will take over A limited and B limited. You are right. Sir, can we use also the terms melting company and acquiring company? Fine, acquiring company is good. If you want to use that terminology, acquirer and acquiree, you can use. Okay, melting is not the word. Just for understanding, I told you amalgamating and amalgamated. Okay. Sir, why amalgamation in the nature of purchase is not related with external reconstruction? My dear, you already forwarded. Just give some more time. Why amalgamation in the nature of merger? We are termed as external reconstruction. You can understand at the end of the chapter. Why amalgamation in the nature of purchase is not form part of external reconstruction. Also, you can understand at the end of the chapter. This is too early to discuss that. Okay. Fine. Next. Yeah, you learned these words in capital gains. I too agree, my dear. Kartik Gupta. Further, sir, I have a doubt that why external reconstruction is in the nature of merger. The same doubt. I already told you. Next. Yeah, the objective of reconstruction is to depict the true and fair picture of whether it is internal reconstruction or external reconstruction. Fine. But why we are learning the concept of amalgamation and absorption, the objectives are different. The objective of amalgamation and absorption is different, but the objective of external reconstruction is different. But coming to the accounting point of view, whether it is amalgamation or external reconstruction, there is no difference for me because in case of amalgamation, also two different types of companies are possible. That is purchasing company and selling company. In case of external reconstruction, also two different companies are possible. That is purchasing company and selling company. But the objectives are quite different. You are right. Because the objective in case of external reconstruction is depicting the true picture, but the objective in case of amalgamation, I already told you, maybe to get the synergy benefit or to get the taxation benefits, okay, maybe for going for expansion or any other reason also. And one more thing, guys, just I want to show you the recent and popular amalgamation happened in India actually. Please allow if you concentrate here, list of mergers in India. I'll come from here. If you can see the 11th one, Flipkart is acquired eBay India. So eBay is also one of the e-commerce organization. So which is ultimately acquired by Flipkart. And coming this State Bank of India, SBI, I'm highlighting here, SBI acquired Bharatiya Mahila Bank, SBI of Bikaner and Jaipur, SBI of Patiala, SBI of Travancore. In 2017, it was happened. Coming to the 8th one, Tata Steel acquired, okay, Session Cup. And Vodafone, you might aware this, okay, Idea Cellular is a different telecom sector company, which is ultimately acquired by the Vodafone. So that is the reason why, if you observe the Vodafone stores, it will be look like VI. Okay. IDFC Bank, you might listen this word IDFC Bank, which is a recent bank established in 2018. So which is previously NBFC Capital First, which is an NBFC, is acquired by the IDFC Bank, which is turned up into a very big organization right now, which is also have good marketplace in the private banking sector. Okay. Recently these occurred Bank of Baroda, which is a public sector undertaking. Vijaya Bank and Dana Bank put together, it converted into a Bank of Baroda, BOB. Okay. So let it be like that. Some popular certain mergers I given. So Indus Towers acquired a Bharati Infratel. So like that, certain things were given, guys. Now come back here. Accounting treatment in the books of selling company, accounting treatment in the books of purchasing company, and purchase consideration. Before discussing these issues, I want to start the problematic issues with types of amalgamation, guys. Please concentrate, all of you. Types of amalgamation. So this 15 minutes discussion is very much important to understand the further. So please, all of you, put your concentrations in higher mode for these 15 minutes. Okay. And before discussing the types of amalgamation, I want to tell you one more thing, guys. Sir, accounting treatment in the books of selling company, is it accounting standard 14 applicable or not, sir? You are telling that for the amalgamation, accounting treatment AS 14 is applicable. That one I told you at the inception of my discussion itself. That is where while discussing external reconstruction and internal reconstruction itself, I put that word. Just a second, I'll show that. Yeah, here in case of external reconstruction, only Companies Act 2013 is applicable. Just a second, not here, one second. Yeah, here it is there. In case of internal reconstruction, only Companies Act 2013 is applicable. But in case of external reconstruction, along with Companies Act 2013, AS 14 is also applicable. Now, I'm talking about the amalgamation. One type of amalgamation is a classic example for external reconstruction. So that means for the entire part of amalgamation accounting treatment, AS 14 is applicable. That's not correct, guys. If you are in that mode, that's not correct. Accounting treatment in the books of selling company, AS 14 is not at all applicable. Accounting treatment in the books of purchasing company and for purchase consideration, for both these concepts, accounting standard 14 is applicable. Yes. Why, sir? Why for accounting treatment in the books of selling company AS 14 is not applicable? For accounting treatment in the books of purchasing company and for calculation of PC, why AS 14 is applicable? That is the next level of discussion. Okay, fine. Now come down to types of amalgamation first. Amalgamation is broadly categorized into two types. One is amalgamation in the nature of merger. Amalgamation in the nature of merger. Another one is amalgamation in the nature of purchase. Amalgamation in the nature of purchase. Sir, when an amalgamation, we can call it as in the nature of merger. When an amalgamation, we can call it as in the nature of purchase. For this, AS 14 clearly clarifies that. AS 14 clearly clarifies that is accounting for amalgamation clearly clarifies that if all the below conditions satisfied, then such type of amalgamation is known as amalgamation in the nature of merger. If any one of the condition it defeated the conditions which were levied in AS 14, if any one of the condition defeated or if any one of the condition not satisfied, automatically that amalgamation is said to be amalgamation in the nature of purchase. If all conditions satisfied, which is known as amalgamation in the nature of merger, If any one of the condition not satisfied, then automatically the amalgamation is said to be amalgamation in the nature of purchase. What are such conditions, sir? Please concentrate. You know, there are two companies exist. Let me take the pure absorption example. Two companies, one is A Limited and another one is B Limited. There are two companies exist. A Limited, B Limited. So you can consider B Limited is takeover. Sorry, A Limited is takeover by B Limited. So B Limited you can consider as a purchasing company. A Limited you can consider as a selling company. Or you can also consider it as a transferee company, which is a transferor company. That's it. Okay, fine. Now, what are such conditions, sir? Or you can call it as absorption as well. Just I'm taking the example of absorption to explain these conditions. Now, this absorption is said to be amalgamation in the nature of merger. All the below conditions should need to satisfy. Condition number one is purchasing company should need to take over all the assets and liabilities of A Limited. all the assets and liabilities of A Limited. That means in my example here, Raju Limited, Rani Limited example we taken previously. If Raju Limited take over the PPE, all the current assets, the entire amount of current liability, and the non-current liabilities like 10% debentures and bank loan, if all the assets as well as all the liabilities is ultimately taken over by the Raju Limited, then we can call it as amalgamation in the nature of merger. Not only that condition is also included to call that amalgamation is form part of amalgamation in the nature of merger. So that means what you are trying to tell here, all assets and liabilities of selling company should be taken over by purchasing company. All, even single asset or liability is not left at selling company premises. So then you may ask a doubt that, sir, in this earlier example, certain assets like P&L account, miscellaneous expenditure not written off is there now. These are taken over by the purchasing company. Those are not at all assets, guys. Miscellaneous expenditure is a fixed asset. There is no physical presence of that asset. P&L account is anyway not an asset. Now, intangible asset, it doesn't have any worth. Even though it has certain book value, but it doesn't have any worth. So that's why these are not taken over by the purchasing company. Still, we can call it as amalgamation in the nature of merger only. Okay. Next, second one, all the assets and liabilities, all assets and liabilities are taken over at book values only. Book values only. That means A Limited is having certain assets or liabilities now. Like here, how the Rani Limited having certain assets and liabilities. All these assets as well as liabilities should be taken over at book values only. That means Raju Limited should need to take over PPE at book value 10 lakh only. Current assets at 5 lakh only. 10% debentures at 7.5 lakh only. Bank loan at 2,50,000 only. Then only the amalgamation is said to be amalgamation in the nature of merger. No, sir. Raju Limited is take over the assets at other than the book value or one of the liability at other than the book value, then which is known as amalgamation in the nature of purchase, not amalgamation in the nature of merger. Do you understand? Next, point number 3, concentrate. Sir, once the Raju Limited take over the business of Rani Limited, Raju Limited should need to pay certain amount to Rani Limited, which is known as PC, purchase consideration. Tell me, guys, because Raju Limited is purchasing the business of Rani Limited means we are the purchaser. If you are in a position to purchase any good or any business or any other thing or any asset, you should need to pay certain amount to the other party, which is known as purchase consideration. Now, such a purchase consideration should be in the form of fully paid up equity shares only. That means Raju Limited should need to pay to the Rani Limited only in the form of equity shares. Raju Limited will not pay in the form of cash. Raju Limited will not pay in the form of preference shares. Raju Limited will not pay in the form of debentures. Raju Limited is going to issue the PC only in the form of equity shares to the Rani Limited. Then only the type of amalgamation is known as amalgamation in the nature of merger. Otherwise, the amalgamation is known as amalgamation in the nature of purchase. So PC, purchase consideration, should be in the form of fully paid up equity shares only. 2 more points are there. Please concentrate. Point number 4. Sir, if Raju Limited is going to issue equity shares to the shareholders of the Rani Limited, then automatically shareholders of the Rani Limited should become Raju Limited, right? That's why they imposed one more condition that at least 90% share capital of the Rani Limited should become the shareholders of the Raju Limited after completion of amalgamation. That to equity shareholders. They are talking about equity shareholders. 90% of the share capital holding in the selling company should become the shareholders of the purchasing company after amalgamation. The same point just here I'm putting, please concentrate. I will explain one more time, no worries. Shareholders holding 90% of share capital in selling company should become shareholders of purchasing company after amalgamation. Shareholders holding 90% of the share capital. Shareholders holding 90% of the share capital should become the shareholders of the purchasing company. That means shareholders holding 90% of the share capital means out of 10 lakhs, 90% means that is 9 lakhs. That 9 lakhs worth of equity shareholders should become the shareholders of the Razu Limited. Sir, here using the word shareholders are only equity shareholders. Here they are using the word shareholders, right? So that's why both preference shareholders also we should need to include. That means out of this 15 lakhs into 90%, shareholders holding 90% of the share capital. Total 15 lakhs into 90%. How much which is? 13.5 lakhs. The shareholders who are already holding shares in the Rani Limited to the extent of 13.5 lakhs worth should become the shareholders of the Razu Limited after amalgamation. Then only that amalgamation is said to be amalgamation in the nature of merger. Otherwise, the amalgamation is said to be amalgamation in the nature of purchase. Next. This is at least, guys. This is at least. So that means all the 100% share capital, all the 100% shareholders of the selling company can become the shareholders of the purchasing company. Yes, they are using the word at least. At least shareholders holding 90% of the share capital in the selling company should become the shareholders of the purchasing company after amalgamation. Coming to point number 5, purchasing company should need to continue the same line of business as conducted by selling company previously. That means, for example, Rani Limited is in the textile industry. Let us assume it is in the textile manufacturing. Sir, after amalgamation, Raju Limited should also need to conduct the textile manufacturing only. If it want to go for the liquor manufacturing, then we are not telling it as an amalgamation in the nature of merger. Simply, we can treat it as an amalgamation in the nature of purchase. Now, once again, I'm going to repeat all these 5 conditions one by one. Please concentrate, guys. All these 5 conditions I'm going to repeat through my theory notes one by one. Please concentrate. Sir, when an amalgamation is known as amalgamation in the nature of merger, sir. Okay, don't see other thing. Only the highlighted portion only you can observe. When the amalgamation is said to be amalgamation in the nature of merger, all assets and liabilities are taken over by the transferee or purchasing company from the selling company. All such assets and liabilities taken over at book values only. PC, purchase consideration, should be paid in the form of fully paid up equity shares only. Shareholders holding not less than 90% share capital of the selling company should become the shareholders of the purchasing company. Purchasing company or the transferee company will continue the same business of the selling company after takeover. These are the basic 5 conditions. These are certain in detailed issues also there will need to be explained. Those are highlighted in the red color, but this is not the right time. I will explain it further. Okay. So can you please all of you repeat with me? What are the 5 conditions it should need to satisfy when the amalgamation is said to be amalgamation in the nature of merger? All the assets and liabilities of the selling company should be taken over by purchasing company. All the assets and liabilities should be taken over at book values. PC should be paid only in the form of fully paid up equity shares only. It should not be paid in the form of cash or debentures or the preference shares. Shareholders holding not less than 90% share capital of the selling company should become the shareholders of the purchasing company after amalgamation. Purchasing company should need to continue the same line of business of the selling company what it is under the previous mode. Am I right? Sir, if any one of the condition is deviated, then such amalgamation is said to be amalgamation in the nature of purchase. These are the basic 5 conditions, and furthermore discussion will be there after break, guys. Hope you understand the concept of merger. I mean, when a particular type of amalgamation is known as merger, these 5 conditions in detail discussion will be there after break. Please, all of you assemble exactly by 8:25, guys. The time is right now 8:15. Please, all of you assemble by 8:25. We'll continue our further discussion. Welcome back, guys. So just now we discussed the types of amalgamation, which is amalgamation in the nature of merger and amalgamation in the nature of purchase. Guys, a small correction. What is that correction I told you? The same point I told you earlier, but again I changed. What is that? Shareholders holding not less than 90% share capital of the selling company should become the shareholders of the purchasing company is there. Which is shareholders we need to consider, sir? Only equity shareholders. That's you are correct. In the overlay, I told you both the type of shareholders. Okay, just now I saw here not all the shareholders, here only equity shareholders. That point is only the correction from my side. So everything is fine. So what are those 5 conditions? Please repeat once again with me, because these 5 conditions are heart of the entire amalgamation. All the assets and liabilities of the selling company should be taken over by the purchasing company. All the assets and liabilities should be taken over at book values only. PC should be payable only in the form of equity shares only, fully paid up equity shares only. Equity shareholders holding not less than 90% of share capital should become the shareholders of the purchasing company after amalgamation. And the same line of business should be continued by the purchasing company after amalgamation. Actually, one good question asked by one of our buddy. Sir, you are telling that to set to be amalgamation in the nature of merger, all the assets and liabilities should be taken over at book values, right? For example, if A limited accounting policies are quite different from B limited accounting policies, how it is possible, sir? I mean, what his point is, for example, A limited is valuing the inventory based on weighted average method. And the B limited is following, for the purpose of inventory valuation, it may follow FIFO method. Let us assume. Then how I can combine simply inventory of A limited and B limited, sir? How it is possible B limited to take over such inventory by follow up with a different accounting policy? For this, before amalgamation, what in generally happening, selling company or the transferor company will prepare those financial statements by applying the accounting policies followed by the purchasing company before start up the process of amalgamation itself. That means what I want to trying to tell here, selling company will prepare those financial statements as like the accounting policies adopted by the purchasing company before initiate the process of amalgamation itself. That's why it is possible to take over the assets and liabilities at book values only. Hope you clear, guys. Mr. Who asked this actually? Mr. Sriram. Okay. Fine. Let me continue my discussion in further. Sir, type of amalgamation is actually relevant for accounting treatment in the books of purchasing company only. Which type of accounting treatment I need to adopt? That is depending upon type of amalgamation. That is amalgamation in the nature of merger, we will adopt one type of accounting treatment. If it is amalgamation in the nature of purchase, we are going to adopt another type of accounting treatment. That too in which company's books? Purchasing company books only. But for the purpose of providing accounting treatment in the books of selling company, type of amalgamation is irrelevant. Believe me, guys, trust me, type of amalgamation is irrelevant in the books of selling company. Type of amalgamation is relevant only in the books of purchasing company. And a type of amalgamation is also irrelevant for calculation of purchase consideration. That means why you are discussing these types of amalgamation, all that stuff, only for the purpose of providing accounting treatment in the books of purchasing company. That point, please, all of you put in your mind, guys. And the next issue. Sir, if the amalgamation is amalgamation in the nature of merger, which type of accounting treatment you are going to provide in the books of purchasing company? The accounting treatment is known as pooling of interest method. What is that, guys? Pooling of interest method. Pooling of interest method. Sir, what this method is all about? I'm not discussing anything, just I'm mentioning the name. If the amalgamation is said to be amalgamation in the nature of merger, then in the books of purchasing company, we are going to adopt pooling of interest method. If the amalgamation is amalgamation in the nature of purchase, we are going to adopt purchase method. The method name is purchase method. Sir, what is happening in case of purchase method? What is happening in case of pooling of interest method? How it is going to different, that is purchase method to the pooling of interest method. All such discussion will be there in the books of purchasing company. Just leave it. So beside all, now first our entire focus will be there on calculation of purchase consideration, guys. Please all of you come to the concept of purchase consideration first. Again, I'm going to discuss approximately for 15 to 20 minutes. We are going to spend very good time on purchase consideration concept, because whatever the problem you can take up from the chapter amalgamation, the major points are the typical issues. Just they are try to cover from this concept only, purchase consideration. So that's why please all of you give a higher concentration levels for understanding this concept. Out of the three problematic issues, we are not at all discussed anything about the selling company. We are not at all discussed anything about the purchasing company. Directly our focus or our discussion is towards calculation of purchase consideration. But simply I told you, for accounting treatment in the books of selling company, AS 14 is not applicable. Accounting treatment in the books of purchasing company is depending upon the type of amalgamation, that is amalgamation in the nature of merger or amalgamation in the nature of purchase. If it is in the nature of merger, pooling of interest method. If it is in the nature of purchase, purchase method. When an amalgamation is said to be amalgamation in the nature of merger, when an amalgamation is said to be amalgamation in the nature of purchase, I explained all these 5 conditions based upon the concept of accounting standard 14. That is based on the provisions of AS 14. That's it. Nothing we discussed much more about accounting in the books of purchasing company as well till now. Now we are focusing on calculation of purchase consideration. I told you for purchase consideration, is it AS 14 applicable or not? For purchase consideration calculation, is it AS 14 applicable or not? Yes, it is applicable. Only for accounting treatment in the books of selling company, only AS 14 is not applicable. Sir, then what is the meaning of purchase consideration as per accounting standard 14? Concentrate, guys, all of you. As per accounting standard 14, purchase consideration is nothing but amount payable by purchasing company to the shareholders of the selling company. To the shareholders of the selling company alone is considered as PC. Purchase consideration is nothing but amount payable by purchasing company to the shareholders of the selling company is only treated as PC. Sir, shareholders means 2 types of shareholders coming into the picture. One is preference shareholders, and another one is equity shareholders. That means in my example, Rani Limited is there, right? Which is a selling company. Razu Limited is a purchasing company. Now, whatever the amount payable by Razu Limited to the shareholders of Rani Limited, that is to the equity shareholders or that is to the preference shareholders, alone considered as purchase consideration. So that means if Razu Limited paid amount to debenture holders of the Rani Limited, can I consider that is also form part of PC? No. Here 10% debenture 7,50,000 is there na. For this 10% debenture holders, let us assume Razu Limited is issuing 10% debentures in their own company at the rate of 10 lakhs. Let us assume that means 10% debenture holders of selling company is getting 10% debentures of purchasing company for the worth of 10 lakhs, but which is not form part of PC. Amount payable to equity and preference shareholders only we can consider as purchase consideration. The same point I am confirming with my notes as well. Please all of you concentrate here. Purchase consideration as per AS 14. As per AS 14, amount payable by purchasing company to the shareholders of the selling company, which was highlighted in red mark. Okay, shareholders of the selling company only treated as PC. Now, sir, the amount may be payable in the form of equity shares, maybe in the form of debentures, maybe in the form of preference shares, maybe in the form of cash, or in any other assets as well. Amount means not in the form of pure cash. That means here, Raju Limited may pay to the shareholders of Rani Limited in the form of equity shares, in the form of preference shares, in the form of debentures, or in the form of cash, or in the form of any other asset also. It may distribute PC to the shareholders of Rani Limited. So what my conclusion is here, to decide the amount of PC, to whom we are paying is relevant, but what we are paying is irrelevant. Once again, please all of you come with me. Please focus on me. Please focus on my words. To decide the amount of PC, to whom we are paying is relevant. To whom we are paying means to the shareholders of the selling company is relevant. But what we are paying is irrelevant. What we means, we may pay in the form of equity shares, we may pay in the form of preference shares, we may pay in the form of debentures, we may pay in the form of cash or in any other assets as well. The same thing I explained here. Please concentrate. Amount payable to the debenture holders of the selling company should not be considered as PC calculation. What the purchasing company is paying is irrelevant, but to whom we are paying is relevant. To explain in the better manner, I gave two cases in my notes. Please, all of you concentrate on these two cases. Let us have a focus. Purchasing company issue 2 equity shares for every equity share in the selling company. Is it form part of PC or not? 2 equity share for every equity share in the selling company to the shareholders of the selling company, which is form part of PC. Purchasing companies also issue 1 preference share for every preference share in the selling company, which is going to issue to the preference shareholders of the selling company, which is also form part of PC. Purchasing company also issue 3 debentures for every 4 debentures in the selling company. Amount payable to the debenture holders of the selling company is not form part of PC. Amount payable to the shareholders of the selling company is only form part of PC. That means these 2 components are only considered to decide the amount of PC. The last component we can ignore straight away. Coming to the case number 2, guys. Purchasing company issued 2 debentures for every equity share in the selling company. It may issue debentures, yes, but to whom it is issued? Equity share. That's why it is form part of PC. Sir, what we are issuing, just you can ignore. To whom we are issuing, that is only the relevant. So that's why you may issue debentures, you may issue preference shares, you may issue equity shares, you may issue cash. That is irrelevant. But to whom you are issuing is only the relevant. So that's why it is form part of PC. Purchasing company also issued 1 preference share for every preference shares in the selling company. So every preference share means which is form part of PC. Purchasing company also issued debentures to the debenture holders of the selling company, which is not form part of PC. Why I added a second case? To know only the reason. To the equity shareholders, we may issue equity shares, we may issue preference shares, we may issue debentures, we may issue cash. It doesn't impact the PC. To whom we are paying is only impact the amount of PC. Do we agree, guys, all of you? In PC calculation, there is no confusion, right? There is a clear picture. Amount payable to the shareholders of the selling company alone considered as PC. Amount payable to debenture holders, is it form part of PC? No. Amount payable to creditors of the selling company, is it form part of PC? No. Amount payable to the bank loan of the selling company, is it form part of PC? No. Whether it is equity shareholder or preference shareholder, irrespective of that, whatever the amount payable by the purchasing company to such shareholders is alone considered as PC as per the discussion made by whom? Yes, 14. Next. Sir, in this chapter, or to tell practically, for calculation of PC, different methodologies may be used by different corporate companies. To be frankly speaking, in practical mode, there is no method at all. According to their terms and conditions, agreed in between the purchasing company and selling company decides the amount of PC. decides the amount of PC. But we are unable to derive the problems based on such terms and conditions, or to remove that ambiguity for all the problems which we are going to discuss in the amalgamation. We discussed based on 4 different types. That means for calculation of PC, here we are going to adopt 4 different methods. One method is lump sum method, lump sum method. Another one is net payments method, net payments method. Another one is net asset value method. And the last one is intrinsic value method. Intrinsic value method. The same thing were explained in my notes as well. No worries. Methods of calculation of PC: lump sum method, net payments method, lump sum method, net payments method, net asset value method, intrinsic value method. Now, come to my OneNote, all of you. Let me discuss about one by one method. Sir, under lump sum method, how to calculate PC, sir? In the problems information, they will directly quote the amount. Lump sum means ad hoc consideration. Ad hoc. How much, sir? They given 50 lakhs. They will give directly 1 CR as a PC. But how they calculated and all such stuff, they will not discuss at all. They are directly given. Ad hoc means certain amount. They are directly given. But how that amount was derived, the base they will not provide. The amount they will directly provide, which is nothing but lump sum method. Lump sum method, we can tell, may not coming into the examinations at all. Because if the amount was directly mentioned in the problem, nothing more to do further in the problem. But when they are using the lump sum method, if they want to test certain other issues, except the purchase consideration issue, then they might directly given the purchase consideration amount. Okay, that is nothing but lump sum method. Lump sum means certain ad hoc consideration. Now, coming to the net payments method. Sir, how to calculate PC under net payments method? Under net payments method, we are going to calculate in the below mode, that is amount payable to equity shareholders of selling company plus amount payable to preference shareholders of the selling company. The total will be treated as purchase consideration under net payments method. Or simply, amount we are going to pay to equity shareholders of selling company, amount we are going to pay to preference shareholders of the selling company, put together, we can call it as purchase consideration under net payments method. That means to decide the PC under net payments method, in the problematic information, they should need to provide how much amount we are going to issue to the equity shareholders and how much amount we are going to issue to the preference shareholders of the selling company. Then only we can able to ascertain the PC under net payments method. So now coming to net asset value method. How to ascertain the PC under net asset value method? The word itself represents net asset value. Net asset means asset minus liabilities. Net assets means assets minus liabilities, which is known as net assets. What are the different assets taken over by purchasing company? Assets taken over by purchasing company at the rate of agreed values, not at book values. For example, sir, I am purchasing your business, right? Your business means your assets and liabilities, right? How much amount I should need to pay to you? How much worth of assets and how much worth of liabilities I am going to take over from you? The same amount I am going to pay. That is nothing but assets taken over at the rate of agreed value. Maybe you are having in your book value different value. That is not at all relevant for me. For example, you are having building. Selling company is having building. That building book value is at 10 lakhs in the balance sheet. But in the outside market, that building value is at 1 CR. Then I need to pay 1 CR, right? So that's why assets are taken over at the rate of agreed value. How much value I'm agreed to take over from you? Less, in the same mode, liabilities. Liabilities taken over at agreed values. If you reduce from one another, then you will get net asset value, which is also treated as purchase consideration under net asset value method. Do you agree, all of you? Under net asset value method, PC is nothing but assets taken over at agreed values less liabilities taken over at agreed value, which is nothing but purchase consideration. Now, all of you coming to intrinsic value method, guys. Please concentrate. Intrinsic value method. Sir, what is the meaning of intrinsic value method? It's very simple. In the selling company, they will tell intrinsic value per share how much. In the problem, they are directly given intrinsic value per share how much in the selling company. Now, PC is equal to number of equity shares, guys. Intrinsic value is only had by equity share. That's why number of equity shares in selling company into intrinsic value per share. Into intrinsic value per share. Then automatically we will get PC. So under intrinsic value method, purchase consideration, nothing but number of equity shares in selling company into intrinsic value per share in the selling company. Then most of the students have a doubt that what is the meaning of intrinsic value, sir? Just simply it told that intrinsic value per share, we should simply multiply with number of equity shares in the selling company, we may get PC, right? What is the meaning of intrinsic value per share, sir? Intrinsic value is nothing but NAV per share. There is no difference between NAV method and intrinsic value method, because in case of net asset value method, PC is equal to NAV, right? In case of intrinsic value method also, number of equity shares in the selling company into intrinsic value per share means the total what we are getting under NAV method as equal to the intrinsic value method only, because intrinsic value is nothing but NAV per share. NAV per share into number of equity share in the selling company, then automatically we will get the PC. Do you understand? Just in the another mode, simply they are given that number of equity shares in the selling company into NAV per share in the selling company, then automatically we will get PC in case of intrinsic value method. Do we agree, guys? All of you? Please let me check my query box as well. Okay. From the starting of net payments method, from starting of PC calculation, I not yet seen. Quickly, guys, can I proceed? Sir, which method has more chances to appear in exam? Just wait. Such discussion is also going to be made further. Agreed values means the value which is agreed between the transferor and transferee. Yes, you are right. At which value the purchasing company wants to take over. That is nothing but agreed value. Sir, the debenture holders of the selling company are issued shares by the purchasing company. Yes, obviously, for the debenture holders of the selling company, purchasing company may issue the shares as well. What not wrong in that? But which is not form part of PC? I need to check only one. To whom I am issuing? Is it to the shareholders of the selling company? Then it is form part of PC. Yes, fine. Yeah. Let me discuss further, guys. There is a lot more discussion need to do to explain furthermore. Sir, we understand what lump sum method is all about. Under net payments method, how to calculate the PC. In case of net asset value method, assets taken over at agreed value less liabilities taken over at agreed value. Under intrinsic value method, number of equity shares in the selling company multiplied with intrinsic value per share in the selling company. That's good. But how to identify which method I need to apply? That is the crucial point. And at that stage, most of the student may feel difficult as well. Please allow me concentrate. After reading the information given in the problem, which method is suitable, how I can need to check. That is very much important. That logic or the way of explanation now I'm going to provide may surprise you. But if you follow the same flow, you will be never fail in the examination. Or to decide or to explain such concept, Before that, just I will provide one case. After that, I'll go for my concept explanation. Please consider all of you. Please be ready for this. Facing this question, you need to answer the question as well. What is the question is, Razu Limited. The question is, Razu Limited going to issue 5 equity shares for every equity share in Rani Limited. Razu Limited is also going to issue 4 preference shares for every 3 preference shareholders of Rani Limited, remaining in the form of cash. Remaining in the form of cash. Which method of PC we need to adopt? Which method of PC we need to adopt? Please start sending the answers in the query box quickly, guys. All of you quickly. Which method of PC we need to adopt in this case? Razu Limited is going to issue 5 equity shares for every equity share in Rani Limited, 4 preference shares for every 3 preference shares in Rani Limited, remaining in the form of cash. Method of PC. Quickly, guys. No answer is coming till now. Quickly, all of you, please participate here. Net payments method, sir. Net payments. Come on, guys. I need participation from more friends. This is the chance you are getting. Please, all of you participate quickly. Very, very few members actually participated. I required some more members. Method of PC. Method of PC. Net payments method. Most of the students, or all the students, just they mentioned the method of PC as net payments method, right? But that is wrong. Yeah, what you said is wrong. Net payments method is absolutely wrong. That is the reason why I told you which method of PC is suitable for that particular situation. We need to check. I will tell you the simple logic how to identify. Why, sir? First, you can tell me, sir, why this is not under net payments method. What I told you, under net payments method, amount payable to equity shareholders plus amount payable to preference shareholders. If you know the total amount will be the purchase consideration. Sir, 5 equity shares for every equity share in Rani Limited, I told you. 4 preference shares for every 3 preference shares in Rani Limited, I told you. Remaining in the form of cash. To whom you are paying remaining in the form of cash, sir? If nothing was mentioned, we should need to assume the remaining should be payable to always equity shareholders. Because whatever the amount they mentioned in the form of cash or something, they are not mentioned means that is payable to equity shareholders. That means for equity shareholders, total 2 different forms they are paying. One is in the form of equity shares, another is in the form of cash. Do you know the total amount payable to equity shareholders now? No. In the form of equity shares, I know, but in the form of cash, how much I don't know. That means the problem information is incomplete. We are unable to apply the net payments method. But we can apply the net asset value method. How you know? If we are reading the problem further, they might given what are the different assets we are purchasing from the selling company at agreed value. They're also giving what are all the different liabilities we are taken over from the selling company at the agreed value. Then we can get the NAV of the selling company, which is nothing but purchase consideration. Let us assume the total amount of the PC is 50 lakhs. Out of 50 lakhs, you know the equity share value already given here. Let us assume equity shares value is 25 lakhs. They're also given how much amount payable in the form of preference shares. Let us assume in the form of preference shares, they paid 20 lakhs. Remaining 25 plus 20, 45, the remaining balancing figure will be 5 lakhs, which is in the form of cash. That means by looking, the method of PC is in net payments method, but the real method of PC we need to apply is net asset value method. So then how we need to check this, sir? It is very much confusing. Then how we need to check? Please all of you follow my technique, guys. After reading the information given in the problem, if you are able to assess amount payable to the equity shareholders of the selling company as well as amount payable to the preference shareholders of the selling company in complete manner or in the complete mode, then the method of PC is net payments method. But while reading the information given in the problem, if you are unable to ascertain the amount payable to either equity shareholders or the preference shareholders in the complete mode, then net payments method which not be applicable. We unable to apply the net payments method, then you can jump to the net asset value method. Then under net asset value method, what are the different assets taken over by the purchasing company at agreed value? And what are the different liabilities we are taken over at agreed value? You can knock off with each other. Then you will get NAV, which is nothing but purchase consideration. Out of which in the form of equity shares, how much? In the form of preference shares, how much? In the form of cash, how much? Then you can decide. Do you understand, all of you? Sir, in case of intrinsic value method, there is no confusion. So many number of times they are using the word, sir, PC is settled on intrinsic value basis, or PC is settled based on at this price. Then automatically intrinsic value method will be strike into your mind. You can finish the problem in very easy mode. Do you understand? Most of the times there is a confusion between net payments method and net asset value method, which method we need to use. At that point of time, apply such logic. Sir, from the information given in the problem, whether I can able to ascertain amount payable to equity shareholders and preference shareholders in the complete mode, then net payments method. Otherwise, net asset value method. Is it clear, guys, all of you? Is it clear? Tell me, guys. Sir, still lot more discussion I need to do for PC computation as well. But at the inception stage itself, if I dump each and everything, it might be burden for you. So give some time, session by session, there is a lot of improvements as well. Okay, fine, guys. Without wasting much time, first let me take up one problem for the discussion for calculation of PC, which is very basic problem. For computation of PC, we can take up one problem from our material. Just a second. Or before taking that problem also, we can check the concept of PC. We can check the concept of PC from my material as well before taking the problem. Then we can take up that problem. Methods of purchase consideration, or before that, purchase consideration. What is the meaning of purchase consideration? As per AS 14, purchase consideration is the aggregate of the shares and other securities. Aggregate of the shares and other securities means we may issue equity shares, we may issue preference shares, we may issue debentures, we may issue cash and any other thing, etc. And the payment made in the form of cash or any other assets by the transferee company to the shareholders of the transferor company, to the shareholders of the selling company is only treated as PC. In simple words, it is the price payable by the transferee company to the transferor company for taking over the business of the transferor company. The important point to be noted here is the amount paid towards the equity shareholders and preference shareholders is only considered as part of the purchase consideration as per the definition under AS 14. Hence, it should be noted that purchase consideration does not include the sum which the transferee company will be directly paid to the debenture holders or the creditors. Debenture holders are the creditors of the transferor company. If you are paying any amount or equity shares or preference shares of the debenture holders to the debenture holders or creditors of the company, creditors of the selling company, which is not form part of PC. This point is important. Next, methods of PC: lump sum method, net payments method, net asset value method, intrinsic value method. In case of lump sum method, transferee company agrees to pay a lump sum or fixed amount to the shareholders of the transferor company. The amount is fixed. That is the reason why in generally this method is not appearing in the exams. Net payments method. Under this method, the transferee company makes individual payments to the equity shareholders and the preference shareholders, either by way of cash or by way of shares or by way of debentures, extra. Net asset value method. Under this method, the purchase consideration is arrived based on the value of the assets less the outside liabilities, excluding the share capital and reserves taken over by the transferee company. Why they are using excluding the share capital and reserves? In our formula, if you observe, we are nowhere mentioned the share capital and reserves of the selling company. We only mentioned assets taken over at the rate of agreed value plus liabilities taken over at the rate of agreed value, which is nothing but NAV. The values, the assets and liabilities should be considered at which value? Agreed value. That was also given clearly. Next, in case of intrinsic value method, purchase consideration is nothing but number of shares in the transferor company, that is number of shares in selling company, that those shares are also equity shares, into intrinsic value per share in the selling company. Automatically we will get intrinsic PC under intrinsic value method, guys. Okay, now come down. Let me take up one problem. Hope you already downloaded the PDFs. The PDFs are with you. Am I right? If you want, you can open in your devices as well, or otherwise you can concentrate on screen. Okay. One Pandya Gayatri, she asked one question actually. What is that? Sir, shares issued to the selling company will also come under the payment. No, such shares issued to whom? Selling company only. To whom? Is it shareholders of the selling company? Then which is coming under the PC? If such shares are issued to the debenture holders of the selling company, which is not form part of PC. Okay. Sir, what is the exact difference between intrinsic value and agreed value? Oh my dear, there is no interrelation between intrinsic value and agreed value at all. Intrinsic value is nothing but net asset value. Intrinsic value is nothing but net asset value. There is no relation between agreed value and intrinsic value at all. Don't think both the concepts simultaneously. Those are not at all relevant. Okay, fine. Next. Okay, sir, clear, understood. Fine. Earlier, actually, Hariram actually correctly told the method of PC is net asset value method. The question what I asked, very few students gave the exact answer. Anyway, hope you clear right now. Okay, please consider all of you. Problem number 2. Sir, why I am considering the PC problems separately? They might sometimes ask the PC computation problems for 4 marks or 5 marks. The same problem is also covered under AS14. Once I covered the chapter amalgamation, AS14 will also cover. Okay, so this is a double bonanza for you. Amalgamation as well as AS14 simultaneously we are covering right now. So S limited is absorbed by P limited. S limited is absorbed by P limited means P limited is a purchasing company. S limited is a selling company. The draft balance sheet of the selling company is as under: sundry assets given for 13 lakhs. Share capital 7% preference shares of rupees 100 each given, which are 2000 preference shares. 100 rupees each means total will be the 2 lakhs. 5000 equity shares of rupees 100 each, which are fully paid up. The amount is 5 lakhs. Reserves 3 lakhs. 6% debentures 2 lakhs. Trade payables 1 lakh. Total of the balance sheet 13 lakhs. First, let me check what is the requirement. You are required to calculate the purchase consideration. The required amount of PC. P Limited has agreed. Purchasing company has agreed with the selling company that to issue 9% preference shares of 100 each in the ratio of 3 shares of P Limited for 4 preference shares in S Limited. Simply what they are trying to tell, for every 4 preference shares in the selling company, purchasing company is ready to issue 3 preference shares. Am I right, guys? Now, can you please tell me what are the total number of preference shares need to be issued by purchasing company to the selling company? For every 4 shares, we need to issue 3 shares means existing number of preference shares, 2000 preference shares. Then for 2000 preference shares, how many number of preference shares going to issue? 2000 multiplied with 3 by 4. And the amount each preference share we are going to issue is 100. That is multiplied with 100. This is the amount of preference shares issued to the preference shareholders of selling company. Next, coming to point number 2, all of you, to issue to the debenture holders in S Limited. Debenture holders in S Limited. Amount payable to debenture holders of the selling company. Amount payable to debenture holders of the selling company is not form part of PC. No need to read any further point as well. No need to read any further sentence as well. Because to issue to the debenture holders of S Limited means selling company. S Limited means selling company. Amount payable to the debenture holders of the selling company is not form part of PC at all. Am I right, guys? As per accounting standard 14, amount payable by the purchasing company to the shareholders of the selling company alone treated as PC. Come to point number 3. To pay 20 rupees per share in cash and to issue 6 equity shares of 100 each in lieu of every 5 shares held in S Limited. That means each and every equity shareholder, for equity shareholders in selling company, we are issuing two different payments. One is cash. In the form of cash, how much we are paying? 20 rupees per share. 5,000 into 20. 5,000 into 20 in the form of cash. In the form of equity shares, how much we are paying? To issue 6 equity shares for every 5 shares. For every 5 shares, we are issuing 6 shares. Existing number of equity shares 5,000. Then for 5,000 shares, how many number of equity shares we are going to issue? 5,000 into 6 by 5. Am I right, guys? To pay 20 per share in cash and to issue 6 equity shares of 100 rupees each in lieu of, for every 5 shares in the S Limited, for every 5 shares, we are going to issue 6 shares. Then for 5,000 shares, how many number of shares we are going to issue? Cross multiplication, 5,000 into 6 by 5. For each share, how much, guys? Market value is 125 rupees per share. Each share is 125. Now you can calculate the total amount of PC quickly, all of you. Let me know the answer in the box, guys. Let me know the answer. Here, this amount is here it is 1,50,000 in the form of preference shares to the equity shareholders in the form of cash, which is 1 lakh, and here it is 5,000 multiplied with 6 by 5 to 125, which is 7,50,000. So total to the preference shareholders of the selling company 1,50,000, to the equity shareholders of the selling company in the form of cash and in the form of equity shares 1 lakh plus 7,50,000, 8,50,000, 8,50,000 plus 1,50,000. Total 10 lakhs. PC is equal to 10 lakhs. Sir, no worries, guys. Everything was clearly given in the form of printed solution to you. To the preference shareholders, we are paid in the form of preference shares. In the form of preference shares, if you observe my printed solution on screen, in the form of 9% preference shares, which is 1,50,000. 2 equity shareholders in the form of cash, 1 lakh. Just now we completed. In the form of equity shares, we are paying 7,50,000. Total will be the 10 lakhs. One question actually I forgot to ask. After reading the entire information in the problem, can you please tell me the method of PC, all of you? We done already the problem, but what is the method of PC? Tell me, guys, please, all of you participate. What is the method of PC? Nobody is interested to put in the query box. Please provide the answer. Method of PC, guys. Whether we are able to ascertain the amount payable to equity and preference shareholders or not. We are able to ascertain amount payable to equity and preference shareholders, then method of PC is net payments method. Absolutely, you are right. Method of PC is net payments method, which is 5 marks problem, which in generally asked in the compulsory question in the category 1, or sometimes they might ask it in the last Roman as well. Okay, fine. Come back, guys. So we are in the part purchase consideration. We see different methods of amalgamations, that is lump sum method, net payments method, net asset value method, intrinsic value method. We see different methods of PC. Now some more discussion just I want to add for calculation of purchase consideration. Okay, please concentrate. What is that, sir? Sir, in most of the times, we've seen the purchase consideration was we are going to pay either in the form of equity shares or either in the form of preference shares or either in the form of debentures or in the form of cash. Am I right? PC, this is nothing but form. In the form of equity, preference, debentures, or cash. But whom we should need to pay? That is sure. That is we need to pay to the shareholders. That means for equity shareholder, we may pay equity shares or preference shares or debentures or cash. For preference shareholders also, we may pay equity, we may issue equity shares, we may issue preference shares, we may issue debentures, we may issue cash. And one more thing, always who is issuing PC? Purchasing company. To whom it is issuing? Shareholders of the selling company. Such points should be bear in your mind first of all, before resolving the problem. Next, my next question is, how many number of shares issued as PC? For example, PC is only in the form of equity shares. Let us assume the purchase consideration is only in the form of equity shares. There are no other forms. That means there are no preference shares, debentures, cash. Only in one form, which is equity shares. Let us assume for the time being. Then how many number of shares issued as PC? How I know, sir? That's quite easy. How many number of shares issued as PC? How I know? First, you should need to check what is the method of PC, right? What is the method of PC? Sir, let us assume if it is lump sum method. Lump sum method, amount will be given now. That is lump sum amount divided by how many number of shares issued as PC means divided by issue price. Purchasing company at each and every share issued at how much price? If you know which is issue price. Let us assume the lump sum amount is 50 lakhs. The issue price is 50 rupees. Maybe the face value is 10 rupees. But how many number of shares issued as PC means I should need to divide by issue price. Then the number of shares issued as PC are, how many number of shares here, guys? 1 lakh. The number of shares are 1 lakh. Now coming to net payments method. Coming to net payments method. In net payments method, how to calculate number of shares issued as PC, sir? First, you should need to calculate PC under net payments method. How to know PC under net payments method? Amount payable to equity shareholders of the selling company, how much? Preference shareholders of the selling company, how much? Total you need to check. Now on that amount, you should need to divide by again issue price. You should need to divide issue price. Then you will get how many number of shares issued as PC in case of net payments method. Next, coming to NAV method. Please consider it, all of you. In case of NAV method, how to know how many number of shares issued as PC? First, you need to calculate the total amount of PC, which is nothing but NAV of the business. That NAV divided by issue price. Then you will know the number of shares issued as PC. Next, what is the last method, guys? Intrinsic value method. Concentrate. Sir, how I know how many number of shares issued as PC in case of intrinsic value method? First, you should need to calculate PC now. What is the PC in case of intrinsic value method? PC in case of intrinsic value method is nothing but number of equity shares in selling company into intrinsic value per share in selling company divided by issue price. Sir, what is the issue price of the purchasing company? At which price purchasing company is going to issue to the selling company, sir? If nothing is mentioned, such issue price is nothing but intrinsic value per share in purchasing company. Because at which price purchasing company want to issue to the selling company, sir? At their NAV per share, is nothing but intrinsic value per share in the purchasing company. Why I am telling all these issues, you know? Sir, how many number of shares issued as PC is nothing but very easy. If you know the amount of PC, you can divide with issue price, right? Then automatically you will get number of shares issued as PC. Why you are making all such entire discussion? I mean it. Why I am making all such discussion, you know? Come down. The reason is the PC, we may record it in two ways. Both the ways are correct. The PC, we may record it issue price, or the PC we may record it, that is issue value, or we may record it par value, or you can treated as face value, anything. This is way of recording the PC. This is way of recording the PC. If nothing is mentioned, PC is in generally recorded issue value only. What is the meaning of issue value, sir? Issue value means number of shares issued as PC into issue price. If nothing is mentioned, we are always recording the PC at issued value only. Sir, number of shares issued as PC into issue price means the same thing. That is 1 lakh into 50 rupees, which is 50 lakhs. But sometimes the PC may record at par value only. Sir, if the PC is recorded at par value, then how to calculate PC? You know, number of shares issued as PC into par value. For example, in the given case, under the lump sum method, the same PC I am going to record at par value means, do you know the amount of PC is how much? Number of shares issued as PC is 1 lakh, right? 1 lakh into par value. What is the face value per each share? Face value per each share is 10 rupees. 1 lakh into 10 rupees. 10 lakh is the amount of PC. But here amount of PC is 50 lakhs. Sir, way of recording the PC itself is different. If you are going to record the PC at issue price, then the amount of PC is equal to number of shares issued as PC into issue price per share. But if the same PC, if you want to record it par value, then number of shares issued as PC, you should need to multiply with the face value. You should not multiply with the issue price. That's why there is a different mechanism for recording PC at issue value and PC at par value. That is the reason why we are calculating number of shares issued as PC under different methods. But you may have a doubt that, sir, if you are going to record PC at issue value, then we derived certain value. If the PC is recorded par value, then we derived another value, na? Then how it is possible, sir? Then both are different PCs means that is not correct, right? My dear, I am telling this is only for recording purpose. But for the selling company, there is no loss, because here how many number of shares you are issuing? I am issuing 1 lakh equity shares. In outside market price, how much? 50 rupees. 1 lakh into 50 lakhs only they are getting. In the par value mechanism also, how many number of shares I am issuing? 1 lakh number of shares. Just for recording purpose, I am recording at 10 rupees. But the real worth was 50 rupees only. Sir, but that's not correct now. Why you are recording at par value? Recording at issue price only correct? Recording at par value also correct only. But at this stage, I unable to explain why recording at par value is as equal to recording at issue value. If specifically mentioned PC is recorded at par value, then only you can apply this mechanism. If nothing is mentioned, you can straight away record the PC at issue value only. But why we are recording par value, sir? Why it is equal to the same accounting treatment recorded at issue value, I am going to discuss at further stage. This is further more story I explained about the PC. Do you believe me, guys? Till now, I didn't enter into the accounting treatment in the books of selling company at all. I not yet started accounting treatment in the books of purchasing company at all. Our entire today's discussion is based on the calculation of PC and certain other stuff, types of amalgamation and all other issues. Next, we are having 10 more minutes. I know we can't directly take up accounting treatment in the books of selling company, but I can tell you certain few important points related to accounting treatment in the books of selling company. I already explained. One more time I'm telling you. Tell me all of you, in my example, what is my example? Rani Limited balance sheet. We considered here na Rani Limited balance sheet. Now, if Razu Limited takes over the Rani Limited means, first of all, Rani Limited should need to be liquidated, right? And Razu Limited should need to be incorporated, right? So Rani Limited, in the books of Rani Limited, which type of accounting treatment we need to adopt, sir? And one more thing, you previously told that in the books of selling company, AS 14 doesn't applicable. Then which type of accounting treatment we need to follow, sir? Simple liquidation procedure we need to follow. Simple liquidation accounting treatment we need to follow. That is normal, generally accepted accounting principles we need to follow. Gap in the books of selling company, which accounting treatment we need to follow, sir? In the books of selling company, we are going to follow gap. Gap means normal accounting treatment. That which accounting treatment? Liquidation. Liquidation means closure of books of accounts. Closure of books of accounts. Yes, might in case of the partnership firm, at the time of dissolution of partnership, you may follow such closure procedure. The same procedure we are going to follow in the selling company books. But in the accounting treatment in the books of purchasing company, which treatment we need to follow, AS 14 will decide. But for AS 14 in the books of selling company, it doesn't have any relevance. And that too in the books of purchasing company, that is depending upon the type of amalgamation. If it is in the nature of merger, we need to adopt pooling of interest method. If it is in the nature of purchase, we need to adopt the purchase method. But when an amalgamation is said to be in the nature of merger, when it is amalgamation is said to be in the nature of purchase, we already discussed 5 conditions need to satisfy. If all these 5 conditions satisfied, then which is in the nature of merger. If any one of the condition deviated, which is in the nature of purchase. That is the link actually we need to discuss, guys. Do you understand, all of you? So link, one more time establishing. In the books of selling company, type of amalgamation is irrelevant. AS 14 doesn't have any relevance. Only closure of books of accounts is going to happen, because which is a liquidating company, which is a sinking company. Coming to accounting treatment in the books of purchasing company, AS 14 will decide method of accounting treatment. If it is in the nature of merger, pooling of interest method. If it is in the nature of purchase, purchase method. When it is in the nature of merger, when it is in the nature of purchase, depending upon such 5 conditions. Do you agree, all of you? With me, guys? Right. Sir, one more thing before leaving the session. One more thing just I want to tell you. Sir, you told that accounting treatment in the books of selling company. Accounting treatment in the books of selling company. Just we are following generally accepted accounting principles. You told just we are following gap, generally accepted accounting principles we are following, right? Then what you are trying to cover here, sir? Selling company, simply what it do? It should need to sell their assets to the purchasing company. It should also need to transfer their liabilities to the purchasing company. Then it should need to get purchase consideration from the purchasing company. Such purchase consideration should need to distribute among the shareholders. Selling company only 3 activities. Concentrate. Here only 3 activities it should need to do. First, to provide the accounting treatment, what exactly happening? First, you should need to observe. Selling company transfers their assets and the liabilities to purchasing company. That is the first task it should need to do. So after transferring their assets and liabilities, it should need to receive purchase consideration from purchasing company. Yes. Now in the selling company hands, it have the PC. Now such PC should need to distribute among. PC should need to distribute among shareholders of selling company or any other party as well. Okay, just it should need to distribute the shareholders of the selling company. Then automatically selling company book should be closed. There is even no balance will appearing in any single component of the financial statements once it distribute. Such a simple procedure we are going to adopt in the books of the selling company in tomorrow's session. Sir, is it AS 14 applicable? No. Is it type of amalgamation should need to know to complete the accounting treatment in the books of selling company? No. Next. Sir, one more thing. At the introduction of this session, I clearly established the difference between external reconstruction and internal reconstruction, right? The objective is same. What is the objective? To depict the financial statements at their true and fair picture. Now, for the purpose of accounting treatment, there is no difference between amalgamation, absorption, and external reconstruction. Even though at the inception, we discussed about the external reconstruction, why we are discussing the concept of amalgamation and absorption, or why we are combining these three topics and put together once. The reason is whether it is amalgamation or absorption or external reconstruction, only two different types of companies are possible. One is transferor company and another one is transferee company. That's why in the problems also sometimes they might discuss about absorption. Sometimes they might discuss about pure amalgamation. Sometimes they may discuss about external reconstruction. There is no need to know about, sir, whether it is absorption or amalgamation or external reconstruction as well, because only we know two things. One is purchasing company, selling company. What is the accounting treatment in the books of selling company? What is the accounting treatment in the books of purchasing company? Sir, one more thing. Whether you are conducting the problem in the books of selling company point of view or in purchasing company point of view, calculation of PC will play crucial role. The reason is you are unable to complete the accounting treatment in the books of selling company without knowing the PC. Because we need to receive the PC from purchasing company, right? How much PC we are receiving? First, you should need to calculate. Again, whether it is amalgamation in the nature of merger or purchase, whether it is in the nature of amalgamation in the nature of merger or purchase in the books of purchasing company, also PC will play crucial role. That is the reason why first I clearly discussed the concept of purchase consideration. Whether it may be net payments method, whether it may be net asset value method, whether it may be intrinsic value method, or whether it may be lump sum method. But in general, if nothing is mentioned, PC, we are going to record it par value, issue price. But if something it is clearly mentioned that PC, you should need to record it par value, then you should need to calculate how many number of shares are issued at PC, then you should need to multiply it at the face value. But I didn't explain the reason why in generally PC is recorded at par value. What is the relation between PC recorded at issue price and PC recorded par value? We are going to discuss it further sessions. Hope you enjoyed my session, guys. Till now, the same flow we are going to continue in the next session topic as well. I already uploaded the PDF main copy, the PDF main material, which is the PDF main material, guys. Okay. As well as PDF solution book. So, which is my theory book. Today, I'm going to upload the theory PDF as well. Please, all of you download all these three documents and revise before appearing to the next session. Until bye. Have a nice day, guys.